Now, tell me, you may think I'm a bit odd, but this is my absolute favourite part of the whole show, and that's our cross to RP data. And today we've got Senior Research Analyst, Cameron Cusher. Cameron, welcome to today's show.
Thanks for having me, Anthony.
Cameron, I can't wait to hear your stories. Now, let's get underway. What's happening globally in property?
Globally in property, the markets are fairly subdued. We're hearing a lot of information out of China that there's a slowdown there, and I guess Australia's not really immune from that. The Australian market's certainly slowing down, and it's very interesting times at the moment for property across the country.
And Cameron, how's it going with Europe? Because obviously there's been a lot of bad news coming out of Europe.
Yeah, a lot of bad news coming out of Europe at the moment, and I think until Greece and then Portugal and Italy and Spain and everyone sorts themselves out, I think we're in for a bit of a turgid time over the coming couple of years, and that's not even taking into consideration the US and the poor performance of their housing market, and potential for further falls in values across the US because of their poor lending practices.
Cameron, the Australian dollar, I mean, obviously interest rates being on hold yesterday is predictable and good news?
Yeah, it certainly is good news. If we look over the last year, property values across the combined capital cities are down by 3.2%. And what we found was the market really started to slow down as soon as the Reserve Bank started lifting interest rates back in 2009. So that's really had a dampener on the market. And I think what's also hurt the market in more recent times is a lot of the rhetoric coming out of the Reserve Bank has been that interest rates would have to increase to make way for the mining boom. Now, if you have a look at the comments from the Reserve Bank this week, that's changed a little bit, and they're suggesting that perhaps if inflation falls like some of the private sector measures suggest, there may be scope to provide some interest rate cuts because retail's a little bit more positive this month. The data's just come out, but certainly credit growth's slow, house prices are falling, and there's not a lot of good news out there at the moment. So
basically, overlaying that is the Australian dollar that's also dropped quite substantially. So that effectively makes our properties cheaper from an international point of view.
Well, that does cheapen us a little bit from an international point of view, but I think people are just still too cautious to make a move in the market, and we're seeing that right across Australia. At the moment, sales volumes across the country are about 11% below the 5-year average, but if you have a look at the 5-year trend, it's certainly starting to trend down quite steeply. And in Adelaide, for example, the market is much weaker, with sales volumes about 22% below their 5-year average. So I think consumer caution is really reigning supreme, and even if we do get some of those interest rate cuts, I think we may see a bit of an increase in sales activity. But as far as value growth goes, I don't know that that's going to encourage people to start speculating on future growth in property prices again. I think they're well and truly focusing on paying down their debt and getting to a more comfortable position.
So Cameron, let's be really specific. People watching this that live in Adelaide, what can they look forward to?
Look, I think we already know through spring it's been a fairly slow start, and I think it's going to be more and more of the same for the remainder of spring and the remainder of this year. If we do get those interest rate cuts, we may start to see a little bit more activity coming back into the housing market. It may also help consumer confidence, and there's a very strong correlation between sales volumes and consumer confidence, which makes sense. If people are confident, they'll be prepared to go out there and transact houses and buy products. If they're not confident, they're less inclined to do that. So interest rate cuts would be encouraging from that perspective, but an interest rate cut means probably that the global economy is not going so well. Unemployment's likely to increase. So I guess you've got to weigh up those factors, but I would expect that we will see some increase in sales activity if we do get those interest rate cuts, but not necessarily a rebound in value. What we may see is those declines slow and maybe even stop, but I don't think that's going to mean that we're going to start seeing prices rising again.
What about time on market? How's that looking around Adelaide or South Australia?
Yeah, so time on market at the moment is certainly increasing. Our measure shows that of those properties sold in August, they took an average of 56 days to sell compared to 46 days last year. And then if we have a look at vendor discounting, it's increasing quite a bit. last year vendors were discounting their properties by 5.3% in order to get a sale. In August this year, they were having to discount by 6.8%. So it still suggests that perhaps the vendors out there are not being as realistic about their prices as they could be, and perhaps not meeting the market.
What about the stock loads? How the numbers of properties available on the market looking like?
We're still fairly elevated right the way across Australia, but in South Australia and in Adelaide in particular, we're seeing that the listings are quite elevated. So the total number of properties on the market at the moment is 35.2% higher than at the same time last year. The interesting thing is the number of new properties advertised for sale over the last month is actually quite a bit lower than it was at the same time last year. It's almost 12% lower than the same time last year. But the low level of sales activity and the longer time it's taking to get properties sold is clearly impacting the market and has resulted in a significant mounting on the amount of stock on the market.
Cameron, they're incredible stats, but there doesn't seem to be any oversupply of empty developers' properties and that around. So I would have thought that should stabilise things.
Well, it will stabilise things as long as we don't continue to see too much new stock come onto the market. So if we can get some of that excess stock sold, that's a good sign for the market. You look at the trend, and it's kind of been bouncing up and down a little bit. It's been showing signs every now and again that those levels are going to improve, and then it goes the other way. So hopefully we can start. Vendors can get more realistic about their prices, and we can start seeing some of that excess stock shifting off the market. Now, certainly, 35% higher volume of stock now than there was last year is
That's
worrying.
a lot.
But if you look in somewhere like Melbourne, for example, 60% more stock on the market now than there was at the same time.
Whoa, they got some problems over there.
They do have a few problems over there, so it's certainly not as bad as it could be.
And what's your prognosis? When will we start seeing prices revert and start going north again?
Look, I think we're probably at least 18 months away from that. I think let people pay down their debt a little bit more, let rents increase a little bit more, and then people start to think about getting back into the property market. But I think it could be a while before we see that growth coming back.
And your advice to people who are selling in spring this year, what is it?
My advice to people selling in spring is you've got to be realistic about what your property is worth and what the market's prepared to pay for it. As I said, you've got 35% more stock than you did at the same time last year. And remembering, this time last year, the market wasn't particularly strong either. So, get real about your price and make sure it's priced to market.
Cameron, the big difference between earlier markets and this one is we know there's a lot of buyers out there, and I've lived through times where there basically are no buyers, but there are this time. So what we are finding, as soon as it hits the price point, bang, they're gone.
Yeah, if you can price it effectively, you'll get it moved. There's no lack of demand out there. It's just a case that people are very discerning at the moment. They don't have to be hurried. There isn't a huge amount of competition. There are buyers out there, but there's not a lot of competition. So, you really need to seize that opportunity and get it priced right and get your property moving.
And maybe have a good marketing campaign too.
That's Leanne saying, she's the marketer, she's saying, and have a good marketing campaign.
That's right.
Exactly right. You need to get it marketed properly and get it sold as quickly as you can, because you don't want it sitting on the market with all those other properties.
Cameron, now to finish off with, because I've been getting the wind up for at least half the time that we've been talking, but as I said, I love catching up on the news. Tell me and tell the people listening, what's the good news? Give me a big hit of good news, and then we'll say see you later.
Well, the good news is that rents are starting to increase. So across the combined capital cities, you're looking at about a 4.5% increase in rents over the last 12 months. If that can continue, that will encourage, obviously that will encourage people to start constructing more, but it also encourage people to start thinking, well, maybe I should be getting into my own house because I'm paying too much for this rental accommodation. So over time, if we can continue to see those rental stats strong, we'll start to see more activity in the purchasing market.
Cameron Kusher, RP Data, some dreadful numbers there, but also some good, some light at the end of the tunnel. So thanks very much for your time, mate.
Thanks, Anthony. Thanks, Leanne.
Thank you.
Okay, now let's go and look at some great properties so you can get the money out of your pockets and go and spend it and buy well of SA's finest properties.